Hey, what's happening, guys? Dan Darrow here with another Options to Play video update. So thank you to those of you that stuck around yesterday for our Options and Play um, coaching session. So this is a little bit of like a quick review of some of the things we talked about, and it's relevant because we're just about to get into like the heart of earnings season, and a lot of last night um, we we covered just kind of like all things earnings, like whether that's strategies, what to look for, like some of like the sentiment going in, right? So it was definitely I feel like a timely opportunity to get together because I mean as we get into earnings, I mean it's going to be jam packed with news flow for like the next like 2 to 3 weeks, right? Um, and there was just like a couple like important things that I wanted to say. And I mean, a lot of you guys probably already watched those earnings on the radar videos I put together, which for me, it's helpful for myself, even compiling it because it helps me think ahead. Okay, and that's one of the things I really want to stress. When it comes to earnings season, you really need to think ahead. You need to have a game plan because like next week, basically every single day, there's going to be hundreds of companies reporting, right? And a lot of times it can be really overwhelming because, I mean, there might be like, 5, 10, 15, 20, 30, 40 different names that you follow that are all reporting on a given day. And if you're scrambling around trying to figure out what you want to do, a lot of times you can either make errors or miss stuff or just be upset that you're kind of just you're sloppy, right? Like you just don't have like a real clear idea of how you want to approach things, right? So I do those videos the week before because then over the weekend, people hopefully can game plan. You can see like what are the big names that day, how do I want to approach it, what am I thinking option wise, right? How does that compare to the pricing? Also, what that does is it allows me to look at ramp into the reports, right? So like Facebook was one that I was looking at. We were waiting for it to get to a big level. Finally got down to the 200-day, right? And so we were looking at a bull trade thinking that Facebook was due for a bounce. It's been a consistent earnings deliver. It consistently delivers on earnings. And it was oversold and into like a big level, right? So we knew when Facebook was reporting end of October. We were waiting for an entrance, and then we got the opportunity. So now you're looking for those ramp into reports, right? Planning ahead. Also, a little bit different is in the aftermath, right? So in addition to like planning in advance, I like to keep a running list of stocks that maybe had large gaps, things I didn't anticipate. I may not have been involved, right? I wasn't in UNH, had a big move on earnings last quarter, but you know me, I love those post earnings gaps. Like I love those 8 EMA catch up trades, right? So I like to keep a list of stocks that had gaps, right? And then I wait for my setups. I wait for like the moving averages. So in this case, the 8 EMA. I wait for it to catch up, and I wait for like that setup I look for, and then I have like a whole new list of names to maybe trade, right? Even if I wasn't in it, it doesn't mean I stop looking at it because there's a lot of opportunity post earnings, right? Like there can still be some really substantial moves, right? And this was one of the examples I used last night. There can still be some really substantial moves even if you didn't catch the earnings pop, right? Say you were upset, you missed like the first 30 points, right? UPST gaps 30 points on earnings. Well, guess what? 30 points was basically nothing compared to what it did after earnings, right? So just because I wasn't in it, right? I missed the earnings move. Doesn't mean I stopped looking at it because sometimes you can have gigantic moves after earnings, right? So keep a list. Track the stuff that has the big gaps, things that surprise to the upside, things that surprise to the downside, because there can still be a lot of opportunity after, all right? And and like last but not least, I mean, make sure the risk you're taking is risk you're comfortable with, right? So if you don't want to take options into earnings because you think that there's too much risk involved, well, think about options before, like ramped into the reports, or think about options after those post earnings gaps, right? Because even if you don't want the extra risk going into the actual print, there's still money to be made around earnings season because stocks are moving a lot, right? So whether that's before or after or on the actual day, stocks are moving and that creates opportunities. So just make sure that the risk you're taking is risk you're comfortable with, and if you don't want that extra earnings day risk, think about trades like either before, or after, maybe a little bit outside the box. All right. So it's going to be a busy week. It's going to be a busy couple weeks. There's going to be a lot going on, and I know I just really want to stress that having a game plan for me helps a lot. And I think if you can start like looking ahead and kind of get an idea in advance, that it could help you as well. All right. So if you like this video and you're looking for more information about trading earnings with options, please follow up with the link in the description of the video for more information on options and play. Have a great night. Stay well, and we'll talk to you all tomorrow.